Good afternoon and welcome to the Understanding Fuel Switching, Genscape's new Generation Fuel Monitor Service webinar. My name is Jamie Weiss and I'm the Marketing Manager here at Genscape. We appreciate you taking the time out of your day to join us and hope those of you that have had a chance to go through the report have found it useful. At any time during the webinar, please feel free to ask questions in the chat box like you see. We'll do our best to answer them all at the end. Today's presenters are Steve Mastronzi, Genscape's Director of Publications, and Travis Milburn, Senior Analyst of Natural Gas. And now I'll turn it over to Steve.
Hey everyone, thanks again for joining us this afternoon. To start things off here, I just wanted to kind of give some background information on Genscape for those on the call that may be a little bit unfamiliar with us. Our core business has been and is monitoring power plants and the real-time output from power plants using a number of proprietary in-the-ground monitors, which we install outside of these plants. As of right now, we have coverage on over 408 plants in North America, and we're looking at around 51% of the installed capacity in the United States. So in addition to these monitors, we also have teams of analysts monitoring and making forecasts on energy markets on a daily basis and adding insight to all of our raw data. A couple of the ways that we monitor these plants, just to go into a little bit more detail, the main thing that we use is our EMF monitors. These are proprietary monitors that were developed by Genscape back in 2000. And we literally install these devices up here underneath the transmission lines leaving power plants and are able to detect what is going on with the output from each one of those plants. So you can see in the chart here, we're able to detect when plants come off and when they're ramping back up and get a real-time indication of what output is coming from these plants on literally a 5-minute basis. Another technology that we utilize is infrared monitoring, where we're taking a look at the heat stamp that comes out of these plants and coming off the stacks. So we're able to gauge how much output these plants are producing by judging that heat and judging what's coming out of the plants. And we've also taken this technology and applied it to other commodity fields such as oil refineries and different agricultural processing plants. And then on the natural gas side, in addition to monitoring those natural gas plants, we actually have sensors that we've installed in the ground to monitor flow on the natural gas pipelines themselves. So we have these acoustic monitors that are in the ground and monitor a vast network of the pipelines across the U.S. and Europe at this point. And basically, the idea here is what do we do with all that data and what does that allow us to do? And that's kind of why we're here and why we're talking to everyone today. This near real-time data gives us the ability to track and look at fuel consumption for all fuels on a real-time basis. So what you're looking at on this slide is basically the EIA data, which is generally lagged. You can see here they put out a report on July 6th of 2012 for April of 2012, and this is when we first saw coal and natural gas on a megawatt-hour output touch. So coal output matched natural gas output for the first time in history. And again, this report came out in July, so 3 months after the fact. Now, if you look down in the corner here, you can see what we're able to do utilizing our proprietary data and our monitors and our models. We're able to take a look at that and give you that information essentially in real time. We could see when that happened in April on the first day that it happened and over the course of the month as it continued to happen. So that's really what brings us here today is kind of utilizing this data and putting it into a report which we're now pleased to offer everyone as the Generation Fuel Monitor Service. This is the report that everyone on the call should have an access to. You should have gotten a copy of the PDF. And if you didn't, you can feel free to go out to the website and download a copy as we go through this report. But what we're doing in that report is, again, utilizing our proprietary information in different models and attempting to correlate that data to the EIA data that comes out on a lag basis. What I'd like to do now is just kind of give a brief overview of some of the methodology behind our models, what we're doing on the coal side and what we're doing on the gas side that may be a little bit different. And then we'll jump kind of right into a report and go over exactly what we're showing in the report and how you can potentially utilize that data in the report in different functions. So Travis, who's on the phone with us, is our natural gas analyst. He's actually out in our Boulder office, and he's going to give you a little bit of a background on the methodology behind our gas burn model.
Yeah, hi. Thanks, Steve. For the gas burn model, what we're trying to estimate is a daily natural gas burn value across the east-west producing, and then roll that up into the lower 48 for the United States. So we have a model that comes out every day and tells us what we think the natural gas was burned for that day across the nation. And the inputs for that model are really interesting. They are the informational postings that all of the interstate natural gas pipelines post on their website. That's public data that we collect, as well as the proprietary EMF values that Steve was just talking about that Genscape has installed at a whole bunch of different power plants. That's proprietary data. And then also public no-notice data. And we don't believe many people out there are looking at this data in order to come up with gas burn values. And it is public data, but it's not frequently looked at. So those are the three model inputs with regard to the gas consumption into our gas burn model: the informational postings, the proprietary values, and the no-notice piece. And then we also use the SEMS data from the EPA, the Continuous Emissions Monitoring System, as well as the EIA's natural gas consumption by in-use data kind of to calibrate our targets. So we use all of that data, and then we create a burn value for the east, the west producing, and then we roll that into a lower 48, and that's what you can see in this report.
Great. Thanks, Travis. So that's on the gas side. And on the coal side, again, where really the major input that goes into our coal model is that proprietary monitor data. As I said earlier, we monitor 146 coal plants across the U.S. That actually gives us coverage on right around 60% of the installed capacity. So that's the major backbone, and kind of without that proprietary data, our coal model wouldn't necessarily be possible. We're also utilizing a lot of other publicly available sources of data. So we, as a company, collect over 55,000 different data points, and we're using things such as ISO demand, the heating and cooling degree days, fuel prices, and even in the coal model, we're looking at gas nominations and gas prices to try to really get a good gauge for that switching and where switching is going to occur and capture that in the model. So just to quickly look at the accuracy that we're talking about with some of these models. You can see here a chart of what our megawatt hour models look like versus the EIA data. What we're always striving for is around an R squared of 0.9 or higher with our regressions, and with the coal and the gas and the nuclear, we're actually above 0.98. So these are very accurate models when it comes down to looking at this data on a daily level, months ahead of when the EIA is able to put out their numbers. And with that, I want to jump into a report and basically go through it and kind of describe in detail what we're doing in each section and how some of these different things can be utilized. So again, this is a report that I believe everyone's seen at this point. But just to kind of go through it here, what we're looking at to start is just your quick snapshot of the national view of what's going on coal versus gas. What we've done is taken that gas model that Travis has developed with his team and our coal model and converted them both to BTUs. So we're looking at comparable units here. We're not trying to gauge tonnage versus BCF. We're looking at BTU versus BTU, so you can graph them on the same chart and really get a clear picture of what's going on and which direction are the fuels headed in. You can see here one of the interesting things to note is as you got towards the end of last year, gas consumption kind of tailed off while coal consumption actually continued to rise and recover a little bit from the lows we saw back in April. I think this is a little bit counterintuitive to maybe what a lot of people in the marketplace might have thought. And you can see that trend has continued into this year with coal consumption running well above what we saw last year and starting off the year pretty strong. The next thing we're looking at is a quick snapshot here of our megawatt hour data. Really, how did coal and gas relate to total demand? You can see on a daily basis for the past week, what did the fuels do versus that demand? And really what you're trying to identify here is, are we actually seeing switching, or is this just a case where we saw an increase or a decrease in total electric demand? And we can get into that a little bit more on page 3 and 4 there. And then we're also breaking down the coal versus gas burn on an average daily basis. So what you're seeing year over year, week over week, and year to date, and how to compare those two. So really, a great picture here of what coal was doing last year and gas versus what they're doing the same week this year. A massive increase in just the daily average burn in coal and a pretty solid decrease here in the daily average burn in gas. And when you go and look at our demand data that's on the next couple of pages, you can see that's clearly an indication that coal is coming back, as we haven't really seen a major change in total power demand. Scrolling down, the next thing here on the front page that I want to go over the methodology for is our parity price chart. What we're trying to show here is how do the consumption of these fuels relate to the pricing that you're seeing. What we have in the green line is the Henry Hub prompt month contract versus the couple of the publicly available data on some of the coal contracts for the prompt month. You're looking at the CSX, the Big Sandy, and the Powder River Basin contracts. And not only are we just looking at the straight contract price, but we've, again, adjusted everything to be on a BTU basis, or $1 per BTU basis. And we've included transportation and efficiency conversions in here. So we are taking into account transportation to these different regions, which would be the Northeast, Southeast, producing, and to the West. And then also taking into account, the fact that coal and gas plants in the Southeast aren't the same as coal and gas plants that you're seeing out in the West. We've looked at the data, and we've come up with, to give a specific example here in the Southeast, we see that the general coal plant has a heat rate of around 10.6, while gas is around 8.5. And that doesn't necessarily, that's not the same as what you see for the efficiencies out in the West. So we're actually converting the price based on that efficiency factor as well. To give you a real clear picture here of what is going on with these fuels relative to their price. I think the best thing to highlight in this chart here is what's going on in April of last year. As we said, and many people know, that's the first time that coal and gas consumption matched on a megawatt hour basis. And you can see here that this is the first time that Henry Hub prices actually dipped below the cheapest Powder River Basin coal prices out in the West. So, and that held steady for a couple weeks there before recovering. So a pretty clear indication that this is when gas really was competitive with every coal that's out there. Then you can see what happened towards the end of the year, where you get into September and October, and that's what we talked about in the first chart, is where coal started to make a recovery and gas continued to dwindle, as these gas prices made a pretty solid jump here from the $3 range to just below $4. So now they're competitive with a lot more, and pretty much any PRB is in the money as far as coal is going. Jumping down to the next page, as Travis mentioned, we break out the gas consumption in east, west, and producing, and we took our coal model and did the same thing. So we matched up the coal burn to different gas regions here, and not only are we giving you a kind of a daily breakout, but we're doing it by each region and totally. So this is a great area where if you're a natural gas trader and you're looking at storage numbers and you want to use this data to calibrate your storage models, you can take a look at what we've got on a daily basis for burn. And this report is going to come out on Fridays, so well in advance of the next week's storage number, to give you an opportunity to say, here's what Genscape saw for gas burn and coal burn for the previous week, and also how that compared to last week and year to date. And again, similar charts to the front here, the daily averages and what we're seeing year over year. Again, you can see some pretty interesting trends here at the end of last year where coal in the east really made a strong recovery. And you can also look and see what happened out in the west. As we mentioned, gas prices became a lot more competitive with that PRB, and you see that the gas consumption continues to trail off here while coal is relatively flat to end the year out in the west. And that's after they came pretty close when you're looking around week 15 here, which was just around April of last year. And jumping down to the next page here, we're back into megawatt hour numbers. So what you were seeing previously is all our BTU data, where we're looking at gas and coal on a BTU basis. But here, we've taken all those numbers, converted them to megawatt hours, and again, utilizing our proprietary data, we're giving you a clear picture of all the fuels in the stack. We have nuclear, renewable, coal and gas, and anything else that's out there as far as other, which would be oil peakers and things like that. But here you're really able to get that clear picture of what's going on as far as national power demand and what fuel are being generated and being consumed to meet that demand. If anybody out there is using the EEI numbers on a weekly basis for total power demand, our number here under this week, under the total, where you see 78.4 million, is our indication of what power demand was. And what we're looking at is not just survey data. Again, this is our in-the-ground installed monitors. So we're looking at real-time live information as opposed to relying on any kind of survey data that's out there. And then down here, taking a look at what that fuel consumption looks like versus total demand. So again, you get a great picture of saying, is this just that we're seeing, say, an increase in gas consumption, or are we looking at an increase in total power demand? Obviously, as you get into the summer here, all the fuels are going up, coal and gas. When you get into the shoulder months here, you can see the dip in nuclear power as we start to drop those units for maintenance season. So you can get a real good indication of what's going on and how each one of the fuels is relating to meet that total power demand. Again, you can see here back in April where coal and gas touched for the first time, and then take a look at how really, it happened in April, and then there was quite a recovery for coal. And we haven't really gone back to that level since, and so far since October, really, we've seen quite a push for coal, where we're back at levels that we didn't see really at all last year. So a great real-time indicator week by week and even day by day of what's going on with each one of the individual fuels. And again, that megawatt hour data on a 5-year basis. A great look at what happened last year, where coal is literally at 2012 lows are the 5-year lows, and gas to start the year is at the 5-year high. And then you can see where we're at this year, where coal is right back in the middle of its range. Gas still running up near its highs, but it's off of where it was last year. Another great thing to look at is just how renewables are playing in. starting to be a much bigger role. We have somewhere around 13 gigs of installed capacity for wind and MISO. You have quite a bit in ERCOT. I think both MISO and ERCOT recently hit record levels for wind generation. And you're able to see how that renewable activity is playing into the national fuel stack, and how they're maybe pushing coal or pushing gas out of the stack on a daily or weekly basis. And then the last thing here is just going over our sample data. This is what we're seeing for our changes in monitored gas units week over week, as far as breaking it out by east, west, and producing. So this is really our raw sample data. This is, again, a big piece of the picture that goes into our models and loading them in and getting that data out there. The next thing that I wanted to show is just, we have this data in this weekly report, but it's also all available for consumption on a daily basis. If you're really looking at these numbers and are interested in pulling the data daily, and loading it into any of your models for analysis, you can do that using our Analyst Tool. We have this product set up in here, Generation Fuel Monitor, where you can go out and see all the data sets, whether it's in BTU, whether it's in megawatt hour, or even our pricing chart, where you can pull out the prices that we're looking at on a daily basis. I'll take a quick look and just show everyone kind of how to utilize this megawatt hour data. If you hit play here, it'll run the query for you. It'll pull out all of our data, and you can see, daily basis what happened yesterday. Coal, gas, nuke, everything here. If you're not looking at it necessarily on a daily basis, but you want to aggregate it bi-weekly, that's a very easy process using this tool. You simply just change your aggregations here by, well, let's say we can do it by month. And we'll run this aggregation by month, sort of, but. And so here you have the data broken out on a monthly aggregation. And you can do your analysis that way. A great part of this tool is you can save any one of these queries, and you can also export them out to a CSV file by just clicking this button and saving it out as a CSV. Another great item here is that we can literally link this into your own Excel workbooks. If you have a query here, this is one that I saved. It's a weekly megawatt hour estimate. You can click here. It'll give you the XML URL. And again, you don't have to be a programmer here to do this. It's all fairly simple stuff. You just copy it, go into Excel, start a new data connection from the web. Once the data loads up, you just click import, and you'd only have to do this once. Once you save your Excel spreadsheet, the information in the link will be there forever. And as long as you have your username and password, you can go in every day and just refresh the data. So here's my query in my Excel sheet. We can pretend that these days weren't here, and all you'd have to do every day is just go in and hit refresh. And the data will update for you. So a very simple way to kind of integrate this data into your Excel workbooks and any existing tools that you might have. But that was, again, that's pretty much what we're looking at with the report. I think we have a couple questions that were coming up, but again, our proprietary data allowing us to make these, models and run a view of what's going on with the entire national fuel stack. So not just taking a look at gas or not just taking a look at coal, but able to really see what all the fuels are doing and what we're looking at for total power demand. I guess now, if you have any questions, feel free to type them in the box. I think we already have a couple queued up here, so let me take a look and see what we can do. Yep. So the first question here was, how often do you recalibrate the models to EIA data? We are doing that on a monthly basis. Whenever new EIA data comes out, we're recalibrating the model and rerunning the regressions to get the new inputs. So that again is done on a monthly basis whenever that new information is available. Actually, these things are. Can I open them online?
So Steve, the second question is, do your adjusted coal prices factor in the cost of reagents like, I think that means limestone and things of that sort, and other emissions controls?
At the moment, they do not, but we take into account, like we said, the heat rates and the transportation costs. At the moment, that is not something that we're factoring in, but we are looking at that, as well as looking at some other ways to calculate transportation costs. We're in negotiations and kind of looking at different sources of available information as something that we can factor in to those adjusted coal prices.
Okay. Now, the price information that you showed, the gas and coal price information, was in one of the charts. Is that data available in the Analyst product?
Yes.
As well?
So all that data is available within the Analyst Tool as part of this natural gas and coal price parity query here. So if you can still see my screen, pulling that up now, all that data is available.
Okay. Yeah, you've got a couple questions to show that information. And the megawatt, the data that you're showing, I think this is really a question about the product architecture. Is this all of this data in the gas Analyst Tool, or is this separate?
This is a separate product from the gas Analyst Tool. So we have some similar data sources that are going in, but the megawatt hour information is actually a separate product within the Analyst Tool.
Okay. Using the same platform.
Using the same platform.
Okay, and I think that is all of the questions.
Okay.
All right, so we want to thank everybody for joining us today, and when you exit the webinar, there's going to be a quick, short 5-question survey that pops up, and we'd appreciate if you could fill it out to help us improve our future webinars. Thanks again for joining us, and if you'd like to sign up for a subscription of the new Generation Fuel Monitor service, please reach out to Robert Limp, our Global Head of Sales here at Genscape, and his information is on the screen. Steve will pull it up now for us. All right, thank you, and have a great afternoon.